Wow, what a start to a new year. This has been the worst performance at the beginning of a year by the Australian market since records began. And global headlines have been populated with bad news. So much so that George Soros has suggested that we're sitting on the precipice of another 2008 crisis. In this scenario, you'd expect that fund managers, especially hedge fund managers, would be racing for the exits, taking short positions and cashing up. Interestingly though, when you look at someone like Nevsky Capital, which after nearly 20 years of producing 18% plus returns for investors and having amassed $1.5 billion of assets under management, the UK hedge fund manager has decided to call it quits and return capital to shareholders. Not because they think their performance is poor. In fact, their performance compares to about 2.5% per annum over the same period from an average hedge fund manager. It's because they feel that the situation is so finely balanced that yes, there is bad news about slowing economies in China and also potentially in other parts of the world, but that policymakers have such aggressive tools at their disposal, like quantitative easing for example, that if the Chinese government decided to deploy this to further stimulate growth in the Chinese economy, that you could actually see asset prices escalate very quickly. In that environment, I think it's really challenging for individual investors. And it was interesting to prompt a reflection on 2008 and the global financial crisis, having just seen The Big Short, which portrays New York hedge fund managers taking short positions against the US housing market during that period. When I reflect on that time and question for myself what might have been done better in my own advice to clients, it's interesting to look at those who have bounced back from the global financial crisis most successfully, both in their portfolio performance, but also emotionally. It's those clients who maintained a good level of liquidity, a diversified, high-quality portfolio, and kept a resolute focus on the future, who chose to stay the course, to maintain full investment, who are by far and away the most successful in our client base now as we potentially head into the next crisis. So would I do things differently? Maybe I would have surveyed the market more carefully and looked for more bargains to buy, because certainly markets can also display the sort of emotions that individuals display and oversell at points. So we'll be here to continue to help you chart the course through 2016, and it will, as always, be a pleasure to be a partner with you in that.